A very good morning to all of you. I, Hina Arora, on behalf of the Committee on Public and Government Financial Management of ICAI, welcome all the viewers to the webinar on impact of global financial crisis on public financial management system. This is the first webinar that is being organized as a part of series of webinar on the theme Good Governance System in Government. Before going further, I would like to give you all a brief overview of the committee's activities. As a partner in nation building, the ICAI through CPGFM is contributing to improve the accounting, financial reporting, and financial management system in all tiers of government in India, including local bodies, also known as local government, that is at the third tier of government. The committee is involved in sensitizing officials of various tiers of government in India by various means such as organizing workshops, developing relevant e-training modules, etc. Submitting technical inputs on various documents of Government Accounting Standards Advisory Board, GASAB, in India and internationally on the documents of International Public Sector Accounting Standards, IPSAS Board. Running certificate course on public finance and government accounting that can be attended by government officials as well. Formulating accounting standards for local bodies, ASLBs, and providing technical support for certificate course for accountants of panchayat and municipal bodies. That is a joint initiative of Office of C&AG and ICAI. Today's topic of discussion is impact of global financial crisis on public financial management system. Global financial crisis significantly impact public financial management systems by causing revenue shocks, increased fiscal deficits, and debt sustainability concerns. Governments face pressure to cut spending or raise taxes, leading to tough policy choices and potential social unrest. During crisis, the coordination of policy response is crucial and relies heavily on seamless collaboration among government agencies. Public financial management systems play an essential role in this coordination by furnishing timely financial information and facilitating resource mobilization, ensuring effective response to the challenges at hand. Our speaker for today's session is Dr. P. Shiva Rama Prasad, who is having expertise in public and government financial management arena. He is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance, and banking with experience of 36 years in banking and financial services, with cross-cultural experience and good knowledge in the banking insurance sector. Fellow member of the Institute of Cost Accountants of India, Kolkata, Indian Institute of Banking and Finance, Mumbai. The Institute of Company Secretaries of India, New Delhi, and Insurance Institute of India, Mumbai, handled senior level responsible positions with higher level interactions and exposures in State Bank of India. He received a gold medal and cash prize for scoring the highest marks in Part 1 and Part 2 of the Management Accountancy examination conducted by the Institute of Cost and Works Accountants of India, Kolkata. This examination is meant for members of ICWAI. Dr. P. Siva Rama Prasad has excellent knowledge in banking, finance, insurance, and forex management, including treasury and credit management. He is an author of several books, study materials for professional institutes like ICSI, ICAI, ICMA, IGNOU, IIBF, Insurance Institute of India, Mumbai, etc. He trained nearly 15,000 chartered accountants, professionals, both in the concurrent audit and treasury and forex management certificate course. Today's webinar will throw light on the concept of impact of global financial crisis on public financial management system in detail. I hope that you all would be benefit from the deliberations of the webinar. After completion of the program, unstructured CP learning of the eligible members who will attend this webinar will be uploaded by us. I once again welcome all the viewers to this webinar. Viewers can also ask their queries. Now I invite the speaker of today's session, Dr. P. Shiva Rama Prasad. Over to you, sir.
Okay. Thank you very much, madam. First of all, my thanks to Committee on Public Government Financial Management of the Institute of Chartered Accountants of India for giving an opportunity to discuss on the impact of global financial crisis on public financial management system. Because here, this is an important topic. When we are reviewing what was happened earlier, that is 2007 and 2008, and that type of mistakes should not repeat. Otherwise, the total world will suffer, particularly the human beings. So, in this particular webinar, I will discuss about the financial crisis, how it was happened, and what are the measures taken by the regulator of the Reserve Bank of India to protect our country. And all these things I will discuss in detail. First of all CA professionals, I wish you all the best for the new financial year 24-25. Now, the today's agenda is the Great Depression, particularly that was happened in 1929 and 1939 between up to Second World War. This was continued up to 1941. Thereafter, I will discuss about our subject, that is a global financial crisis. That is 2007 and 2008. And what are its side effects? Once any calamity was happened, lot of side effects are there. What are the side effects of that particular financial crisis? And what was happened? Why it was happened like that? And how our country, particularly the emerging country like India, how they are coping up with that global financial crisis. And in last, I will discuss about the review of the particular global crisis and what is the root cause. Root cause is a simple one that I will discuss at the end, that is in the last slide. What is the root cause of that global crisis? And how it impacts on the total public financial management system of the country. And everybody knows about this one. That is a Great Depression. That is a 1929-1931. This is the longest and the deepest downturn the history of the United States, and it is a modern industrial economy also. Then one decade. And between 1941, it was continued. Thereby, a lot of sufferings are there across the world. Not only this one, the causes in 1921, that is the stock market crash across the world. There are many causes of the 1929 stock market crash, and some of them are included overinflated shares. Bubbles always burst. Bubbles always burst. Even in stock market also, we are talking about a fundamental and a technical analysis. But today, these two concepts are not working well. Beyond that, some more concepts, some more the formula is adopted. That's why bubbles always lost. Or bubbles, if it a bubble is there, always dangerous. Growing bank loans, too much growing bank loans is also dangerous. A liquidity problem in the economy will arise. That is harder in the money of the public, not public deposited. And if they are giving a loan and the liquidity problem to repay the deposits is a problem. Not only that one, agriculture overproduction also. So the demand and supply gap is always be required. If the supply is more than the demand, then automatically the prices of the product will crash. Not only that one, panic in the selling. Some of the people left and right, they are selling their shares. So further, it may decrease also. That panic also arises in the great crash, that is in 1929 to 1941. Not only that one, stocks purchased on margin, narrow margin, and higher interest rates. Once the liquidity problem in the economy is there, definitely the money problem will arise. Once the money problem arises, people are ready to take with a higher rate of interest and a negative media industry. Once the problem arises, the media is also to be supported. If at all they floated the rumors and they imagine, some of the media they will imagine, and if that message is percolated in the country, then automatically the side effects or ill effects will be more. That's why it is called a great crash. That is 1921, 29 to 39, and it was extended up to Second World War, 1941. Now, our subject is 2007 2008. That is a global financial crisis. It is an interesting subject also. Once the world is that they shake on account of a global crisis, why it was happened? What are the reasons? What are the solutions that are available to arrest in future? That is a learning lessons. The governments should learn that one. Still date, lot of people they are reading. Why it was happened? What are the reasons? How to overcome if the same situation arises? Even pandemic COVID-19 also. That is a world completely shaken on account of pandemic COVID-19. Those are how the governments are overcome that problem. All these things are to be learning lessons. And the future, if at all the same situation arises, how to cope up, how to overcome, that is to be thinking that should be addressed by the particular governments whenever the same situation arises. In 2007, 2008, financial crisis sent world into great recession, the most significant economic downturn. And compared to the Great Depression, once the Great Depression, after that global, those are two important one, and the learning lessons are very, very important. How it affects the public financial management system also, we have to know. The problem is originated large scale effects in the US subprime mortgage market. Actually, the root cause is subprime lending crisis. There is a difference between a prime lending and subprime lending. What is a prime lending? Whenever the quality borrower is there, rating of the borrower is there good, then the banks are giving loans to those people with a lower rate of interest. That is called prime lending. Subprime lending means low-rated borrowers. Low-rated borrowers, banks are also giving loans with a higher rate of interest. But in that particular scenario, what was happened is in US, when the official of the Federal Reserve, he suggested why banks are always looking for high-rated borrowers. High-rated borrowers are very few in the economy. Why not finance to the low-rated borrowers also? Then banks, particularly the commercial banks, they left and right financing to the low-rated borrowers. Even once the people are going, they dragged into the banking premises and sanction the loan. That type of situation was happened in USA because the home loans, particularly they have given home loans. Even the prospective borrower told, I'm a defaulter in credit, I'm a defaulter in other bank means, no problem. If at all you are going to give higher rate of interest, we will sanction the loan. That is the root cause. And once the low rating people, even India also, the Trade Information Bureau of India Limited, civil, that the civil rating now the banks are looking for. If at all the civil rating is not there, who is the correct borrower, who is the bad borrower, it is very difficult to distinguish. So that's why in US also, the subprime lending. The subprime lending means a prime lending a lower rate of interest, subprime lending is a higher rate of interest. The official of a Federal Reserve clearly told if you sanction the subprime lending loans, then the profit of the bank will increase. People believe that one. Then they started loans, given the loans, but limit of the rate of interest, a higher rate of interest, the principal is also lost. The principal is also lost. Associated with the market, complex derivatives. The derivatives are also risk mitigation. But today, the derivative is also a complex subject. Some of the people, it is very easy to understand also. And it is a risk mitigation product like forward contracts or future contracts or swaps, options, etc., etc. But the derivative market, particularly the derivative market, is also arrested on account of this subprime lending crisis. And because even loans defaults are there, the derivative companies they will give the guarantee. If at all the loan failure is there, I'm ready to pay. Once the loan failure, they will also guess a small amount, but the probability is higher. Then they are unable to repay to the banks also. The credit derivatives in August 2007 spread that fire like a fire. Particularly the crisis fire was total financial sector, the whole in the USA, and then to spread to Europe and other parts of the world. Other parts of the world. And early 2007, actually, subprime lending crisis was started early 2007, and subprime lenders began to file the bankruptcy because started they non-performing assets in our country. We will call it as a non-performing assets. The NPAs are increasing, zooming. At that time, because I have seen that a business line at that time, it is very easy to purchase a house in the prices of the housing also very low because the Hindu also they have put that the pictures and in August 2007 losses from subprime loan investment caused panic stopped the global lending. Lifeline of the economy is lending. Once the banks are not lending, then the economy will halt. The agriculture, the industry, the service sector, all three important sectors are depending on the banking system. That's why the banks are called backbone to the economy. In 2007, 2008, financial crisis developed gradually. Once it is developed, it is very difficult to arrest. Once the governments are not taken instant action, if instant action is not there, then the problem will like a cancer. The cancer to a patient, it will spread the total body. In the similar manner, the side effects will affect the global economy as a whole. And 2007, 2008, the financial crisis developed gradually, home prices began fall. That's why I told at that time I have while I am reading the business line, the tags are also there on a home pictures tag. This house is for this one, this one, this one. The banks are also stopped lending and they are starting the selling of the particular home loans, the homes, houses, those who are defaulted with the bank because the people are taken, particularly the low-rated borrowers have taken the loans, and the bank has given notice, they not responded. Then the bank asked them to vacate the house. They simply vacate the house. The banks are pressurized to sell the houses. Instead of a lending activity, they started the selling activity of the houses. That is the situation at that time on account of a subprime lending crisis. What is a subprime lending crisis? You have to understand what is a subprime lending crisis. That is the root cause of the global financial crisis. That is the origin point. So we should understand what is the subprime lending crisis. And the subprime mortgage crisis in 2008, it was started early in 2007, was one of the main contributors for a broader global financial crisis. I am also thinking today in India also, left and right, home loans are sanctioning by the banks. That too, the home loan period is maximum period is 30 years as per the Reserve Bank of India Act. If it all that the home loans are failed, how they will repay the deposits to the public? The main sources of the lending is the deposits. Once the recovery is not happened, even pandemic COVID the 19 also on account of retrenchment of the IT people and their salaries are not increased. There is no promotion. Thereby the income levels are decreased. And once the income levels are decreased, immediately the repayment problem arises. Then the Reserve Bank of India is also given some cushion time to restructure their loans, particularly equated monthly installments. The subprime mortgage crisis occurred in 2007 to 2010 after collapse of the US housing market. The US collapsed, completely collapsed. Once they started that housing finance, like left and right across the USA. Today, India also it is happening. Everywhere, real estate construction. Everywhere, skyscrapers. The buildings are skyscrapers. Even though some of the people they are having 2 to 3 houses also. Government objective is only one person, one family should have one house. And some of the places, the occupancy rate, even though the houses are constructed, people are not occupying. The supply is also increasing when compared to the demand also. If a demand and supply gap is not there, then the recovery will not be a problem. When the housing bubble burst, many borrowers are unable to pay back their due loans. This same situation was happening in pandemic COVID-19 also. Income levels are reduced. Today, particularly earlier, the banks are giving housing loans to the government officials. Today, private sector, even private sector also attrition rate is more. Today they will join, tomorrow they will resign, and they will join another, and sometimes gap on account of non-availability of the employment. And the dramatic increase in foreclosures caused many financial institutions collapse. Once the loan is not paid, then the bank will foreclosures. Then they will file a suit and they will recover that amount by selling the assets. Once the supply is more, where is the buyers for that? Housing, particularly in US economy at that moment, the housing supply is more. The prices also crash. Once the prices are housing prices are crashed, how they will recover the total outstandings of the particular loans? So that's why the dramatic increase in the foreclosures caused many financial institutions to collapse. Not only this one, besides the US housing market falling, the stock market also fall. Why? Because most of the investors are invested in housing finance. Once their investments are marketability is not there, stock market will naturally crash. Suppose in a housing finance company or a bank, I'm the investor, I have invested. Also, the bank is incurring the losses. My market value of the share will crash and the liquidity will not be there. So, besides, so that is interrelated. The investment and the lending, particularly the banks are also today, the share capital is also there. Once the banks are flourished, the shares of the bank will increase. Once the banks are incurring losses, shares will also, relative shares will also fall. So the interdependence between the banking and investment, lending and investment is there. And stock market also fell. With the Dow Jones industrial average fell more than half. That is a benchmark. The index is also more than 50% reduced or crash. The crisis spread around the world. It is like a cancer. Why? Because the connectivity is there. On account of globalization, every country boundaries are there. But business wise, investment wise, funds flow wise, there is no boundary. World is one economy, particularly from the business point of view. The crisis is spread across around the world and was then main trigger of the global financial crisis. Because connectivity is there. If connectivity is not there, every country self-sufficiency is there, it will not depend on other country, then the problem will not arise. But today, every country connectivity is there. We are depending on the exports. We are depending on imports from the other countries. That was what we have seen in the pandemic COVID also on account of shutdown or lockdown. The transport system is blocked. Then people suffered a lot on account of connectivity with the other countries. And subprime mortgages or loans are to the borrowers bad credit and more likely to default. Why the banks are giving to the bad credit borrowers? Even though one official of the Federal Reserve, he has given as if he knows all these things. He suggested the banks, why you are looking for prime lending borrowers? The prime lending borrowers always give lower rate of interest. Why not give to the subprime lending borrowers? Those borrowers' history is bad. Give and recover more rate of interest. Then that particular theory they practiced and collapsed the total market of the USA. Not only that one, it is spread across the world also because on account of interconnectivity is also there. So separate mortgages loans are given to borrowers who had bad credit. Suppose today, even a civil rating 650 or 700 score above, the banks are giving. Tomorrow, banks are reduced to 500 means then that type of a bank's high risk is there. Even though they want to lend more, you search for new borrowers or develop new products, not extend to the bad credit history borrowers. The bad history credit borrowers, the USA tested that one in their particular financial market. They thought that is a financial market lab. They tested this bad credit borrowers. If at all I have given, then the bank profits will increase like that. That was not happened. That research is failed. So that should not happen in the other countries also. During housing boom, particularly 2000 time, that is 2000 onwards, boom is their housing. Once the housing boom is there, then economic activity, the economy will activate. Suppose take for example today, why the government is encouraging housing. Once the housing is encouraged, cement industry demand will increase, steel industry demand will increase, transport demand will increase, electronic accessories like particularly air conditioned fans and other things will increase. And it creates a lot of employment. That's why this is one sector. If that sector is touched, then other will be activated. But for that also limitation is there. So during the boom 2000, many lenders gave subprime mortgages. The borrowers who were qualified, who were not qualified. So lenders gave subprime mortgages to borrowers who are not, they are not eligible. If at all I am a defaulter for credit card, defaulter with other banks, defaulter with money lenders, my CIBIL is completely minus, the bank should not finance. But in the USA, that is the root cause of the subprime lending crisis. Irregular borrowers, bad credit borrowers, they have given home loans. That's why the market is completely crashed. In 2006, a year before the crisis started, financial institution lent $600 billion. In subprime lending, that much quantum of loans they have given. Almost one out of four loans. If at all they have sanctioned four loans, one loan is low-rated borrowers. 23.4% mortgage loans are failed. Once the bank, one-fourth of the loans are failed means the banks will melt like anything. The cheap credit relaxed lending standards allowed many high-risk borrowers to purchase overpriced. One side, the borrower capacity is not there. The credit worthiness is not there. He is a bad credit history. Low rating is there. They are purchasing a high-end models of the villas or houses. So the banks are also given, which is not correct. Overpriced homes, fueling to the housing bubble. Overpriced houses. The income is not there, credit history is bad, and he is defaulted with all other institutions. But his aim is to purchase a high-end model of houses. And the huge impact on mortgage-backed securities. Once the banks are giving loan, that will be converted into mortgage-backed securities, and the investors will invest, and that mortgage-backed securities will trade in the market. Once the loans are filled, the mortgage-backed securities will turn into bad, then automatically the stock market is also turn into crash. That is called collateralized obligations. That is mortgage securities. Every bank in the US, what has happened is they will give the loan and block they will convert into securities, and the securities will sell to the investors, and these securities will trade in the secondary market. And once the loans are turned into that, the security quality or rating will decrease. Once the rating will decrease, definitely market crash will also happen. So the banking system and securities market, lending and investment, both are affected. Investment products backed with the mortgage security. Thereby, on account of this problem, particularly the subprime lending origin problem, what was happened? Stock market crash. That is effect, side effects, credit crunches, the bursting of the financial bubbles, and the sovereign defaults. Government also, whatever they bond, once the loans are turning to back, the banks are not getting profit. Once the banks are not getting profit, the corporate tax they don't pay. Once the particular people are also turning to non-performing assets, they don't get any loans for their activities. All are interlinked. The government income, that is a direct or indirect tax, also linked to the various aspects. So sovereign defaults, government is also unable to pay their government bonds or securities, because once they are getting the adequate revenue from the people, then they will pay. Otherwise, how do they pay? Suppose take, for example, pandemic COVID-19. People are not getting any interest on account of lockdown or shutdown. And some of the companies, they stopped the payment of salaries also, because they don't have the business. And once the loan, once they are getting revenue, they will purchase the goods. Once they purchase the goods, GST will increase. Or once they receive the income tax they will purchase. If no activity, the government will also no income. Once no income, sovereign defaults will also increase. Not only that one, currency crisis. The currency crisis, volatility. The value of the currency depends upon the strengths of the country, the balance of trade, the balance of payments, the inflation rate, the stock market, the banking sector. All these parameters are increasing the currency value of the country. If all these problems are realized, currency crisis are examples of the particular crisis. Financial crisis are not limited to single country. If at all that is happened in USA, there is no problem. Or in one segment, particularly housing law, no problem. But it is spread regionally and globally also. Because interconnectivity is there. At that time also, ICICI Bank, they have invested some amount in this mortgage-backed securities. They are also failed. But the amount is not a major amount. That's why the bank is such. At that time, the State Bank of India is coming to the rescue of the ICICI Bank during that subprime lending crisis. Lot of rumors were happened. in the market, ICICI Bank, a lot of investment put in the particular the US market, all are turning to bad. Then people are started to withdraw their deposits from ICICI Bank. At that time, the WhatsApp, the SMS, the email culture is not up to the mark. Then at that time, I am in Bombay, and the message is percolated only the Ahmedabad. Had it happened today, ICICI Bank may not be there. The panic of the people, they will started to visit to the branches, ATMs, and at that time, the chairman of the ICICI Bank, Mr. Kamath, is there. And they asked the State Bank of India come into rescue and helped a lot to overcome that particular problem. And the financial crisis in a single country or one segment or financial service, but spread regionally or globally. Spread started. Even that was started in India also. But how we can come out of that particular crisis, I will discuss later on. When the bubble burst, definitely these are bubbles. The stock market is also bubble because the banks are given the bad loans, not good loans, and burst financial institutions were left holding trillions of dollars worth of near worthless investment in somewhere. Whoever is invested, whether it is ICICI Bank or Bank of America or any DBS Bank, Developing Bank of Singapore, or any bank, whatever the investment in USA, particularly in the mortgage-backed securities, nearly worthless investments. It is a worthless investment. Banking panics were a genesis of several financial crises, which leads to recession or depressions. At that time, the role of the media is to support the country, not to give any bad rumors about. If at all it is a genuine, undoubtedly. If rumors are spread, then further panic will arise and people will start to withdraw the funds from banks. Means the same situation was happened in Silicon Valley Bank recently. And once the financial question is turning to bad, people started to withdraw the funds. All funds are blocked in loans. How the banks will repay the deposits? Today also, even all banks, particularly my bank, State Bank of India, 40 lakhs crores deposits are there. Out of 40 lakhs crores, nearly 30 lakhs crores loans are given. If any problem arises, whether they are able to pay deposits of 40 lakhs crores, of only 10 lakhs is possible. Remaining 30 lakhs crores are with the public. Housing loan, 10 years, 15 years, working capital, term loan to the companies, all are there. So banking panics were also genesis of several financial crises, of which recession or depressions. In June 2007, two big hedge funds also failed. Particularly for all these loans, to mitigate the risk, hedging was also there. Once these loans are a huge amount, how the hedge will pay? Okay, if it will, suppose take for example, we are taking insurance policies, particularly for motor or fire or house, etc. Suppose if all houses are on account of earthquake damage, whether insurance companies will pay the amount? No. So in the similar manner, hedge funds also some limitation is there. If loss is certain extent, they will pay, not beyond that extent. Consider the down in investment in subprime loans. In September 2008, Lehman Brothers also collapsed in the biggest US bankruptcy ever. Actually, Lehman is the fourth largest investment bank. People are invested in a Lehman. The Lehman Brothers are also invested in a home loan. Home loan turned into bad. These investment bad, and ultimately the investors suffered. United States with 25,000 employees worldwide, and it had 639 billion in assets and 613 billion in liabilities. That is also very, very bad situation. Measures to taken by authorities, yes, authority. Okay, the crisis. Once the crisis has happened, instantly we have to attack. There is no scope for a discussion, and brainstorming is very much required, and take the action instantly. That was happened in India also. The same was happened instantly. That's why the effect of the global financial crisis is not that much affected to the emerging country like India. So measures are taken by the US authorities. What US authority? During the financial crisis, any financial crisis, governments are to fine-tune the following important policies. They have to take important policy. The two eyes of any country is called, one is a monetary policy, second one is fiscal policy. These two policies have to be functioned properly, not only in small, they in good, favorable conditions in the country. In case of a crisis, also these two only will come into the rescue. Important policy instantly without delay. There is no scope. War footing basis. We have to rise to the occasion. One is monetary policy, second one is fiscal policy. Right? In the economy, liquidity problem is there. Banks liquidity problem is there. Government liquidity problem is there. In the financial management system of any company also, why the companies are failed? On account of liquidity management. If the liquidity is not supported, the company will convert into sick. The company will turn into sick. So that's why the liquidity problem in the country resolved instantly. Otherwise, financial crisis impact will be more in the economy. So instantly that is to be attacked. For that, normally the US Federal Reserve also aggressive monetary policy they started. In this crisis, only two policies are to be used effectively and efficiently. And they have started using the aggressive monetary policy. Measures include quantitative easing, all are reduced. Then whatever the particular policy tools are there, they will fine tune that. Of sugar sources. Then only the economy, the body, particularly the person, will survive. Otherwise, low blood sugars means he will collapse. He will go into the coma. In the similar manner, once the country is facing the problem of liquidity, support the liquidity. Otherwise, the country will suffer and the country will collapse. So if blood glucose levels of a drop significantly, it is advisable to engage the rapid acting of a sugar sources such as fruit juice prescribed by the healthcare professionals. Not only that one, in case of a blood platelet counts, particularly human beings, it decreases excessively. Physicians may opt to replenish the lost blood administration transfusion and concentrated on the blood cells or platelets. In the similar manner, once the economy is struggling for liquidity, you have to pump the liquidity. You have to increase the liquidity. How to increase the liquidity? You take the monetary policy as well as fiscal policy. That is the financial management system. That is the public financial management system of particularly whenever global financial crises are happening. If at all you are referring at that time, then it is a problem. In these two cases also, if at all you are taking the person to the hospital. In the meantime, further loss will be there. First, you have to give the sugar in case of low blood, the sugarless person. And the platelets instantly tell the doctor this is a problem. Start inject the platelets. Otherwise, after certain time, after certain decrease, even the increase in platelets is waste. Once the problem is aggravated, we should not, it is very difficult to restore the country also. That's why I have given these two small examples to understand the better of the particular during the crisis of any economy. Similarly, with the content of an economic downturn, the primary concern lies in sufficient liquidity. That is the main reason. You have to focus on that area instead of the measures and all these things, a discussion, committee. If at all you form committee recommendations after 15 days means in the meantime it will spread like a cancer. The liquidity problem, the insufficient liquidity, introducing additional funds to restore the economy, to overcome that particular crisis, serve as a strategy to mitigate the financial crisis. That is the need of our, in case of any struggle. Now I will discuss in detail what I discussed earlier, what measures the USA taken, what measures the India taken, and at the end I will give the conclusion also. What happened to the September 2008 in USA? It is now a history. But the history also we have to read. No, that is history. Gatam Gataha. In Sanskrit, Gatam Gataha. No, that is also a story. That is also learning lesson for us. Learning lesson for us. Had I been there in the particular government, definitely I will use that strategies. So here, even though it is a history, learning points are there. Notable points are there. Vital points are how they restore, how they articulated the policies, particularly the fiscal and monetary policies, to make the country a viable country, that to public financial management system not suffered a lot. Global financial crisis. Again, I will go through that in detail about that one. Global financial crisis is extraordinary dimensions. Once the global financial crisis are there, extraordinary dimensions. It is not only for that region, not only for that sector, it spreads to the country to world also. The situation described worst since 1920. Everybody learned that the Great Depression also, 1929 to 1939, but it was extended up to World War II. There have been a sharp decline in the stock market across the world, disruption in international money markets, and fueling the investors' panic, particularly the liquidity. Once the liquidity problem in the country arises, the money market of the country should be strong, not the capital market. Capital market is a long-term funds. Money market starts from overnight to 365 days. It is a money market. We have to strengthen the money market. Then the money market will give the fuel to the, it is a fuel to the country to overcome the liquidity problem. So the money market is very, very important. Even in India also, lot of money market instruments are there. Commercial papers are there, certificate of deposits are there, government treasury bills are there. That is 90 or 91 or 182 or 360 like that. The treasury bills are also there. These are comes under the money market instrument. Once the financial crisis are there, the first and foremost, the government should focus on money market instruments. Government and central bank responded to the crisis with an aggressive, unconventional measure. Actually, here, We should not talk about the committee. We should not talk about the delegation. We should not talk about the committee has to delegate, they take a decision, then only, and powers are with the top management, or powers are with the central government. Like that, we should not bypass all these things. Bypass all these things. If at all you are again conventional methods means this is suppose take for example any company in a house, any problem arises to individual, we should not think about the auto or ambulance or car or whatever the mode of transport is there. Even though he may be the rich person, he is traveling in a high-end model car. But at this moment, even auto is also sufficient. Or rickshaw also, we have to carry that person to the hospital. In the similar manner, this is also like that. We should not talk about the conventional method. Unconventional method, we have to bypass that one. Otherwise, the problem will be aggravated. Calm and confidence of the. Moreover, IMF committed risk of some of the worst affected country like Iceland and Ukraine or Hungary. Actually, the International Monetary Fund rule is once any country is suffering on account of various reasons, balance of trade or balance of payment or unemployment or any drought or floods, they will come into recession. But the world is having the problem. They are also having certain limitations. Their asset base is also, their funds base is also limited. But they have given some support to Iceland and Ukraine or Hungary. But worldwide, all countries supported means their base is very less, even though all countries are contributing. In fact, IMF always giving a long-term funding. But at that time, long-term funding is not required. Short-term is required. So IMF would create a new short-term lending facility to channel funds quickly to emerging market to surge over the liquidity problem during the crisis. After this global financial crisis, now they are thinking about how to provide the short-term funding to the countries where the liquidity problem is. This is a learning lesson for IMF also, International Monetary Fund, a wing of the World Bank. In early September, the large US government sponsored mortgage banks are put into custodianship by the government. Mortgage banks, if ever banks are failed, people are havoc. Then the government will come into the rescue. No, we will nationalize that one. Don't worry about your deposit. We are there to pay the deposits. If that assurance is there, the panic will reduce. In the early September, two large US government-sponsored mortgage put into custodianship by the government. In mid-September, the major investment bank filed with the bankruptcy. Once the problem is there, then it will spread. And two investment banks permitted to regulators to become commercial banks. Immediately, investment banks are converted into commercial banks. Why? Because commercial banks means the deposits will come. And the government guarantee is also there. Take, for example, in India also, if at all the banks are failed, Deposit Insurance and Credit Guarantee Corporation, up to 5 lakhs they will pay. That is a subsidiary of Reserve Bank of India, DICGs. So if that measures are taken, people, the panic will reduce. On September 25th, money market ground to halt. Because the money market also some limitations are there. Okay. If at all banks are required liquidity support, how the money market will support? Halt, and the interbank repo rates rose to almost record level. Once the demand is there, the price will increase. Once the demand is not there, price will decrease. That is a law of demand. So even money market, everybody is depending on money market to satisfy the liquidity means where the money market also certain funds, limited funds. The US financial system virtually collapsed. Government also, they are giving some funding. But even suppose that, for example, if they want to take from banks, banks are also suffering. The government automatically, they will also become helpless. US financial system virtually collapse. The US Treasury, particularly rescue plan, 700 billion to clear the bad debt overhead. Whatever the bad debts are there, particularly some banks, that is, they have rescue plan of 700 crores. In October 14, 2008, the board of governors of Federal Reserve, that is a regulator for banks in USA, US Department Treasury, that is a government of USA, and the Federal Deposit Insurance Corporation, like in our country, DSHC, made a joint statement. In that particular time, everybody has to give a joint statement. Thereby, the confidence of the people will increase and damage will stop. Further damage will stop. Joint statement offering their resolve to protect the US economy. To strengthen the public confidence in the financial institution, substitute the robust financing of a credit market. Credit markets are to be robust. Low-rated borrowers, willful defaulters, low-rating, civil rating borrowers, without income borrowers, if the financial system is giving loans, this type of problems will arise. This type of problems will arise. This is a simple problem. One message percolated in USA banks. Why can't you give low-rating borrowers loans? That creates a havoc across the world. The wave of a banking infection cleared through Benelux, Germany, UK, Spain, Ireland, Iceland, and the provoked government intervention. In fact, some banks were nationalized. So once this is happening, definitely 100%, others will also copy. What USA is doing, it is a showcase for others. What USA is doing, why not I adopted that one? And others are also adopted that one. Some of the countries, their banks are also nationalized. Once a nationalized remains, people will happy. Okay, government support. That is the ultimate guarantee beyond your gold or house guarantee or mortgage of any property. Beyond that, once the government is given guarantee, that is ultimate. Beyond that, there is no guarantee. There is no guarantee. UK has steps into the recapitalization of the banking system. Once the losses are there, then capital will be eroded. You know better. The losses will be assets side, capital liability side. If you take the net tangible net worth of the company or bank, capital minus losses is equal to tangible net worth. So UK steps into the recapitalization, losses of banks, then additional capital is pumped by the UK banking system. The government of Australia and New Zealand has announced the decision of the guarantee bank deposits. They have also given a guarantee. Otherwise, people will start. People, that is a hard-earned money of the public. If at all bank of the collapse, then their hard-earned money is blocked there. So that's why to give the confidence in the minds of the public, particularly Australia and New Zealand, bank guarantee, bank deposits, they have given the guarantee. The world has witnessed an extraordinary cooperation from among the major central banks and joint action harmonize their policy. Across the world, all banks, they discuss together and how to overcome the problem. That the synergy effect, lot of benefit was happened to overcome that financial crisis. The global financial crisis problem is on account of the brainstorming of the country heads, particularly the regulators. The world has witnessed extraordinary cooperation among the major central banks and the joint actions to harmonize their policies. The actions are focused in two objectives. What is the action? What is the immediate action? Okay, global financial is a first inject the massive liquidity in the system. Inject the massive liquidity in the system. First, you inject whatever possibility is there, pump in the money, that broad money to be increased. That M3, broad money is called M3. The supply of money in the economy should be increased. Then the problem will solve. Second one, the reduce the policy rates. Whatever the repo rate, whatever the reverse repo rate, whatever the bank rate, in Indian terminology, the rates are come down. Once the problem is there, people, how they will pay higher rate of interest for their business? Suppose during the crisis, if at all industries are asking a higher rate of interest, because the regulatory is the repo rate is changed. Repo rate changed means bank rate will also increase. Once the bank rate is also increased, the particular industry's loans are also to be increased. Once the industry loans are increased, the cost of production will increase. Once the cost of production increases, the price of the product will increase. Once the price of product will increase, people income levels are not increased. How they will pay? How they will purchase? Then whatever the production is, that is also sheer waste. Then he will also turn into bad loan. So the rates are to be decreased. The policy rates, like repo rates or bank rates, or government the lending rates are to be reduced. Then automatically people will take and start the process, and they will supply the goods in the economy. Employment generation, gross domestic product will increase. In October 2008, Bank of England, European Central Bank, Federal Reserve Bank of Japan, and Swiss National Bank jointly announced the measures of improve the liquidity. Once the sugar problem, low sugar problem is there, immediately you give the sugar. Once the platelets are decreased, the same platelets have to be increased, they injected. In the similar manner, liquidity problem is there. You inject the liquidity problem in the system, then automatically all the banks, that is October 2008, the Bank of England, the European Central Bank, the Federal Reserve Bank of Japan, and Swiss National Bank jointly announced the measures of the improved liquidity. They have took the addition, and accordingly they have. Similarly, Bank of England, European Central Bank, Federal Reserve, and Synergis Risk Bank and Swiss National Bank reduced their policy rates also. The second point is, first one is liquidity, second one is the policy rates, the repo rates. Particularly if banks are borrowing from Reserve Bank, the rates should be low, not high during that crisis. If at all high, banks will not take. If not take, they don't give the loan. Once a loan is not given, economic activity will not happen. So similarly, the Bank of England, European Central Bank, Federal Reserve, Synergis Risk Bank, and Swiss National Bank reduced their policy rates 50% basis points on October 2000. They reduce the concrete evidence. If proof indeed is needed, evidence, the proof is indeed is needed of the severity of the crisis facing the global financial system. This is the learning lesson. Once the problem of liquidity is there, try to improve the liquidity, whatever the sources. Today, What is happening means planning is missing in most of the governments. No planning, no forecasting, no long-term plannings about that. Only contingency plan or short-term plans, which will not work in the long run for the development of the state or development of the country. As a cumulative result of these disturbances, global economic prospects has been reduced, weakening of the US economy. The wider effects ongoing financial market crisis, volatility. Once the market is crashed, energy sector, food sector, commodities prices, all are in different shape. These are the side effects. Only stock market and banks, once they are facing the problem, the indirect effect is on different sectors. Once they are not getting funds, particularly energy prices will increase. Once the funds are not getting by the food industry, whatever the food manufacture industries are there, whatever the manufacturing units are there, that they will sell with higher rate. And the commodity prices also. So that's why the side effects are more. According to the outlook of the economy, particularly IMF global GDP growth rate reduced the speed of 5% in 2007 to 3.9 in 2008 and a further 3% in 2000. At that time, the GDP growth is also suffered. Correct. Once you are halted, suppose you are traveling in a car and you stop for taking tea. And before taking the tea, the car speed is 120. And stop that car for taking the tea. Again, to reach the 120, instantly, if you push the button, it will not go 120. So, in a slow manner, it will rise and reach to the 120. In a similar manner, now it is down. Again, to reach the GDP, it will take a lot of time. But my country, our country, how they coping up with the global crisis, particularly the financial management. Because the public financial management, the liquidity to be supported. Once I supported the liquidity through public financial management system, then only the country will restore. Otherwise, I have to safeguard my country also. How India coping up with the global crisis? Actually, though India outside the epicenter of this crisis, it cannot be safe to the global developments. Okay, not that much damage, but damage. But damage. But still safe at that time. Safety also very, very important for the country. Reserve Bank of India proactive at that time and has taken several steps to minimize the adverse impact of the global financial crisis on the Indian economy. That's why I told, once the crisis has happened, the public financial management system is to be safeguarded by two policies. One is a monetary policy, second one is fiscal policy. The Reserve Bank of India is proactive, has taken several steps to minimize the adverse impact of the global financial crisis on the Indian economy. The then governor, particularly at that time during financial crisis, Dr. Dure Subbarao is the governor of the Reserve Bank of India, devoted a considerable part of his time to develop the midterm review of an annual policy statement 2008 to 2009. Whatever the midterm review is there, because worldwide some problem is there, financial crisis problem is there, some impact there in the economy, but some damage also happened, not that much. But how to overcome that gap? he developed a suitable policy, midterm review policy for the benefit of the country. At that time, he is the architect to overcome this. They provide useful insights into the wonder and how indicate India is coping up the crisis. If you go through that particular midterm review policy of the Reserve Bank of India 2008 and 2009, you can get a full information. What measures they have taken, particularly the then governor, Dr. Dhuvuri Subbarao. And particularly India financial system, first he announced India financial system is stable and healthy. Because the financial management of the country completely depending on the Reserve Bank of India, wherever it is there, whether it is a Federal Reserve of the particular the USA or the Reserve Bank of India of the Indian government, they have to design. They have to develop. Even pandemic COVID also, the Reserve Bank of India governor, Sri Shaktikant Das, immediately he sanctioned 20% emergency loan because a liquidity problem arises. People are not going to the offices. Their salaries are also not paid. Consumption is to be activated. Once the consumption is activated, economic growth will happen. But the consumption is activated means how? Immediately he sanctioned 20% to all the business. Not only that, when in the US also, for that pandemic, they credited some amount to the individual savings bank accounts also, bank accounts also. Once the amount is contributed by government, they will start the consumption. Consumption leads to production. Production leads to economic activity like that. India's financial sector stable and healthy. He declared. Otherwise, the media will give the wrong certain times. All indicators of the financial strength of the capital adequacy of the banks are good. No problem. Non-performing assets are also very reasonable, not alarming. Return on assets of the bank is also good, not bad, of our commercial banks, within which 88% of the bank assets are robust. Only 12% of the loans. Certain problem is there. 88% of the bank assets means investments and loans. The bank assets are only two, investments and loans. These two are perfect. 88. Don't worry about the other assets are building computers. That is peanuts. But 88% are robust. Don't. That message is to be given to the public. Otherwise, the panic from USA to start to India, they comes to India also. We have to give the confidence. We have to give that the trust, because we are there. You need not worry. And while many banks or quasi-bank financial institutions in advanced countries have suffered, at the same time, he announced, okay, that is different countries, they suffered large losses also. Whatever the picture is there, he has to reveal without hiding. And a substantial capital infusion is also happened in other countries. Bailout packages are also allowed in the USA. Indian banks are affected marginally. He told clearly. Dear public, your country is not suffered that much. They do not have direct financial exposure. Even though some ICICI Bank and others, they invested in that the mortgage, they invest mortgage companies in the other countries, but that is not up to not a major amount. That's why don't have the direct financial exposure to the USA subprime assets. That is there, but not that much. Not that much. And overall capital adequacy of the commercial banks is 12.7%. The risk weight assets versus the capital is 12. Out of risk assets, that is investments or advances, 12.7 is the capital of the banks are there. But against our country, benchmark is 9%. But at that time, the global benchmark is 8%. 8 minus, if you compare the 8, 4.7 extra is the capital, then there is no problem. Further, the regulator keeps 25% of the net demand liabilities are SLR. Out of the total deposits of the bank, 25% are government security. Don't worry about the depositors. Don't be panicked. Don't be panicked. Out of the total deposits, nearly 25% are kept in government securities. Don't worry. And 6.5 in CRR. Not only that one, out of the total deposit, 6.5 they kept with the Reserve Bank of India. Total bank deposits 31.5, 25 plus 6.5. Total deposits are with either government securities or cash reservation. This is an inherent strength to the Indian banks. One side, capital adequacy is good. Second side, the SLR is high. Third side, CRR is also high. Don't worry. Like that, he has given the public statement. One of the major problems faced by the Indian bank is tightening the only tightening the liquidity. Liquidity is not up to the mark. He also clearly, categorically told, okay, Indian banks short in only 3 or 4 weeks like that, caused by the portfolio investors outflow of foreign nation. Foreign institutional investors' funds are out. That's why that problem arises. FIs, we are there investing in a secondary market. On account of the withdrawal by the FFIs, the country liquidity problems, some problem is there. And how much problem? For instance, portfolio investment outflows recorded 7.3 billion during the financial year. And contrast to the net inflows, last year, previous year, inflow during that period is 18.9 billion. But this year, 7.3 billion outflow is there corresponding. That's why don't worry. Only that liquidity problem, the capital adequacy problem is not there. Cash reserve ratio beyond that 6.5 is there. And SLR, banks deposits 25% they have invested in government security. That the government is giving guarantee. Don't worry to withdraw the deposits. That message is given by Dr. Duburi Subbarao, ex-governor of RBI. At that moment, he is governor of RBI. They took several measures during the midterms 2008. Easy the liquidity stress. Okay. Only one problem is there in India. That is easy liquidity. These included cumulative reduction of 2.5 basis points in CIR. Once 6.5 to 2.5 reduced to 4%, then the CRR funds back to the banks. Banks' liquidity position is increased. Banks' liquidity position is increased. So once the CRR percentage from 6.5 to 4%, then 2.5, so many crores back to the bank, thereby the liquidity problem is solved. A special facility of 20,000 crores to improve the liquidity pressure. They have given, banks can take 20,000 crores based on the balance sheet, then from Reserve Bank, faced by the mutual funds, provision 25,000 first installment of agriculture. Earlier, the agriculture waiver debt scheme is there in banks also. Agriculture debt waiver scheme is there. After also the total waiver scheme, 25,000 payment also made by the government to the banks. This 25,000, that 20,000, 45,000, and 2.5 reduced CRR. So much funds, the liquidity problem is increased. Then banks are happy. Country is happy because only one problem is there. The liquidity crunch is there. The liquidity crunch also solved like this. The total liquidity support to the banks, a massive figure of 1,85,000 crores pumped into the economy. Whether it is a CRR or 20,000 or 25,000, particularly this the debt refund or other measures, the Reserve Bank of India supported 1,85,000 crores funds in the helping in the economy, thereby the liquidity problem solved. And everybody is enjoying and everybody is happy. Every time the then governor, Dr. Duris Subbarao, takes this type of action. Governments should also give support whenever that type of actions are taken. Thereby today, we have not faced that global financial crisis, but some damage is there. The damage is not the inevitable. That is inevitable. Why? Because the world number of developed countries have faced the problem, but emerging country like India, a small damage was happened on account of particularly the public financial management system. 1,85,000 funds are given to the economy. Thereby, the economy regained and the wheels of the economy are moved. Wheels of the economy are moved. The easing of the liquidity pressure is reflected, but call money rates touched the peak. So the banks, they required funds and call money overnight to the 14 days or notice period. All our rate of interest is 9.8. If you see the today, the call money market rate is 5.10. At that time, funds are not there, liquidity problem, rate of interest. Now, touch rate and eased in October 10th, eased normal subsequently. Now, 10th October, during the crisis, they have reduced and the problem also solved. The most noticeable victim of the global meltdown was stock market. At that time, the share market is also some problem is there. And the India bull market phase 2003 till 2008 was unprecedented. The census reaching the peak of 20,873 in May 2008, January 2008. Subsequently, the started falling the peak in October 2008, partly reflecting the infection, particularly that US market infection was spread into the India's capital market also. The New York or London market, partly as a result of a massive outflow of funds from the financial institutions. So New York and the London market, they suffered a lot on account of this one. The Sensex is 8,701 in October 2004, 2024. And not 24. During the 24th October, the lowest level is 35 months. Although the index rose that subsequently 10,000 like that. So the worst affected one is the stock market. The stock market also regained over a period of time. And then that is also a resistance is strength that withstand. RBI acted again November 1st, reducing the CRR, SLR 1%. So 4 to 3% or 26 to 25%, like that they reduce. Further liquidity is pumping in the economy. In this effect measure, banks are usable sources of 80,000. Once for 1% reduced both in CRR and SLR, another 80,000. This is the public financial management. The financial management system is the funds flow in the economy. The funds flow in the economy. Once the funds flow is stopped, economy will halt. Economy will halt. Next, Dr. S.S. Tarapur, the former Deputy Governor, estimates the total liquidity pumped by RBI through all these measures added to 3 lakhs crores. Total at that time, all measures, whether reducing CRR or SLR or the waiver, the debt waiver funds or 20,000 crores, all are at total is 3 lakhs crores. Once 3 lakhs of crores, money is pumped in the economy, then economy is reactivated, regained, and restored, and that problem we have overcome that problem. That's why in any economy, once the liquidity problem arises on account of crisis, first we have to target on the liquidity problem. Then only it will do. So for that also I have given some the examples also. The underlying idea was create enabling the environment for banks reduce their lending rate. Once the banks are reducing the lending rate, then demand for loans will increase. Once the demand for loans are increased, then economy activate. It is a booster dose to the economy. If the loans are high costly, nobody will take the loan except willful defaulters. Those who are interested to take, always they are asking for low rate of interest. Even business also, we are talking about IRR, internal rate of return. If the loans taken by the company more than the internal rate of return, it is not viable. So that's why the banks are also reduce the rate of interest. Once they reduce the rate of interest, then automatically the economy activity was private sector also demanding cheaper lending rate structure with the little pushing from the finance minister. Even at that time, all corporates, no, sir, economy is having some problem. If you provide a lower rate of interest, then we will take and economy will activate. And probably led by the State Bank of India decided to reduce the prime lending rate by 75 basis points with effect from November 10th. So at that time, State Bank of India, they reduced 75. Other banks are also reduced parallelly. Then the corporates are also getting cheaper loans from the bank and they manufacture the goods and they sell with lower pricing. Once the lower pricing means low demand, definitely the product demand will increase. Once the demand will increase, the growth rate will also increase. It creates employment, GDP, etc. This cheaper credit will spur the corporate sector growth. This definitely helps a lot to the corporate. India has coped with the global financial crisis reasonably well. Even though we are, the other countries are facing a lot of problems, we have not faced that problem. We have not faced that problem. We have overcome that problem on account of particularly the government fiscal policy as well as the monetary policy. Monetary policy gives a lot of scope. They have pumped additional money. They have reduced the reserve rates like the SLR and CLR. They have given supported to the banks additional funds also. Mr. Tarapur, the then deputy governor, also told 3 lakhs crores money is pumped in the economy, then automatically it is a fuel to the economy engine. The economy, Indian economy engine, fuel is nothing but the amount. That amount is subscribed or given by the banks, by the Reserve Bank of. Not only that one, for instance, RBI has revised the GDP forecast 2008 to 2000 only marginally down by 0.5. Actually, they forecasted 8% and GDP growth 7 point. That is a good achievement. Even though the global financial crisis are there and whatever the financial management addressed by the none other than the regulator of the country, that is the Reserve Bank of India. Even in the pandemic COVID also, the Reserve Bank of India supported a lot to the corporates. They have given an emergency loan. Why? Because a liquidity problem. But in other countries, the governments also directly credited some amount, particularly in the USA also. During the pandemic, they directly credited to the bank accounts of the public and purchase, consume. Once the consumption is there, again the economic activity will stop. So even though the GDP rate is forecasted, the Reserve Bank of India 8%, marginal reduction 7.5, it is achieved. That is a great achievement during that global financial crisis. There are other two factors which would help India sustain such higher growth in the world threatened by the recession. Other than this, India is also two other factors would help India sustain the higher growth rate in the world threatened by the recession. One is first, extremely the crude oil prices have shown dramatic decline from 145 per barrel in 2000 around 60. Once that is also contributed a lot because once the prices are reduced, then the production cost will decrease. Once the particularly the transport departments or some countries that are using the oil and the cost of production is also reduced. Secondly, drastically inflation is reduced speed. Inflation reached to 12.76% in August, declined to 11%. So that's also once inflation is there, then it is very difficult. These also to some extent contributed for the restoration of economy during that particular financial crisis. The Governor Dr. Subbarao sir has emphasized quite evidently the upward shift in our growth path has been possible because of a higher pace of investment. Investment as per the share of GDP increased 25% to 38%. And our economy is not damaged. Okay, some percentage of damage was happened, but on account of that one, the signals are reaching to the world. Indian economy is not faced any problem on account of a global financial crisis. That's why the investments are also increased 25% to the 2007 38%. And that confidence, next, out of this 13% point increase, as much 10% points financed by domestically through higher household, public, and corporate savings. So that is the reason within the country only. Within the country, the investments are increased. Interestingly, enough inward foreign direct investment has continued to remain resilient during the crisis. That is the strength of the country. That is the strength of the country. Even though world is facing a lot of problem, but our country is not wrong. Our financial system is a strong system. And our policy guidelines are also strong. That's why we are able to overcome that problem. Today also, across the world, 8 plus 2.5, that is 11.5, 10.5 capital adequacy ratio is 2.5 is a buffer, 8 is the base. And Reserve Bank of India told, why 8? Why not 9? You increase capital, 9 plus 2.5, 11.5. 11 point, well, world is maintaining, world, all financial banks, they are maintaining 10.5, but in India, on risk assets, we are maintaining capital of 11.5. So that type of reforms are good. And whatever the policy measures are good. And from time to time, they are more cautious whenever the situations are arise. At that time also, the government support the Reserve Bank of India policies, all are positive to achieve or to overcome the global financial crisis. Thus, India growth story is still intact. Credibility is also there. That's why the extra commercial borrowings are whatever. One minute, sir. Some preparation. So that's the India story still intact and credibility. All these things are there. So that's why our financial system is strong. Our policies are strong, and being an emerging country, that too highly populated country, we are sustained. We are overcome the problems of this type of problems, and particularly learning lessons. What learning lessons? The central bank lowered the rate of interest to very low levels, large amount of money to the institution and banks stimulate the economy. So the first learning is the lower rate of interest. Even during crisis also, if banks are charging higher rate of interest for the lending, the Reserve Bank of India repo rates are also more, economy will not survive. Economy will not survive. The economy will survive, particularly during crisis, once the rate of interest is to be reduced. Once the rate of interest is reduced, people will borrow money. Otherwise, they may not borrow. And second one is a large amount of money. That is a pumping of money during that crisis. As per Dr. S.S. Tarapur's, sir, that is 3 lakhs crores. 3 lakhs crores for this country that is required. Once that amount is there, definitely economy will activate. That is a learning lesson. The funds management, the financial management, and not only that one, government increases spending, stimulate the demand, support employees through the economy. They are also spending. Once the government infrastructure and other things are happening, then automatically employment will creation. Employment employees will consume that one. Once that other products derived demand will also increase. And guaranteed deposits. Once the banks are, the government is giving guarantee to the depositors, so depositors will not withdraw the funds. Thereby, banks will not suffer. Bank bonds to shore up the confidence of the financial firms and purchase their ownership stakes in banks. Some government in the other countries, once this problem arises, bankruptcy problem arises, the government is taken over the banks. That is required. Otherwise, panic will arise. The people confidence on the financial system will lose. And the financial institution, in order to prevent the bankruptcies, could make worse panic in the financial market. That's why once this type of situations arise, government, even though it is incurring losses and non-performing assets are more, that is to be nationalized by the government. So that's why both the fiscal and monetary policies are very, very important during the financial crisis. Not only that one, strengthen the supervision, the financial companies, that is banks, in response to the crisis. And the regulators are step up to the scrutiny of the banks and financial. Once this type of situations are happened, it should not happen in future. Further, the strong regulatory measures are required. If at all a regulator is casual approaches there in the regulatory activities, then this type of situations arise. And this type of situation should not arise means the regulator, whether it is a insurance regulator, IRDAI, or whether it is a banking regulator, Reserve Bank of India, or the capital market regulator, particularly the Securities Exchange Board of India, or Pension Provident Regulatory Authority, all regulatory authorities, they have to discharge their duties effectively and efficiently. Otherwise, this type of a situation will arise. In addition, new global regulation banks now need to assess the risk of lending. Whatever the best practices are there in lending, we should not copy the worst the practices. The worst practice is low-rated borrowers finance means all the mess is created on account of that particular official message of the USA. Low-rated borrowers also you finance means the banks will collapse. So today also some of the banks still in India also, even civil rating is low, they are giving funding. Once he is the willful defaulter or defaulted with other bank or defaulted with the credit cards, the pumping of the money to that particular person should be stopped. But if at all the loan is not paid on account of various reasons, natural calamities or other things, then we may consider. But if at all you are giving loans to the bad rated, low rating, willful defaulters, this type of problems will arise. That the problems are not only to that country, but also other countries will spread. In addition to many global regulations, banks now need to assess the risk of lending more accurately and use the resilient functioning steps. Today, even Indian banks also, more accurately they have to give. They should not always think about the budgets. The quality of lending is very, very important. Once the banks are failed, the country will fail. That's why banks are called backbone to the economy. Once the banks are there, the country three important sector, primary, secondary, tertiary, or agriculture, industries, or service sector will grow. Without banking, without financial system, no country will grow. No country will grow. That is sure. The regulator also become more vigilant. No casual approach. Also, they are violating the norms, penalize that one. Cancel the license. About the risk can spread throughout the financial system and are calling measures to prevent them spreading. They have to be vigilant. Otherwise, a bad message will propaganda in the particular sector also or system also. Conclusion. 2007-2008, the financial crisis, also known as subprime lending crisis, mortgage crisis, a severe liquidity crisis in global financial market. Once the severe liquidity is the main issue. Okay, the severe liquidity crisis, how it is happened, that is a different case. That is a different one. And as a result of collapse of US housing market. Once, if at all tasty food is there, if at all we have eaten more, then automatically the problems will arise. The tasty means to some extent you have to eat, not to a large extent. But in US also, if there is a US housing market is there, lend reasonably, not over finance, not excess finance, not taking into low rated borrowers. Once you have do like that, the investment banks, the commercial banks, the securities market, that is capital market, all will spoil. Then it will be a burden to the country. Not only burden to the country, because now all are in globalization, connectivity. It will spread that reflections on other country, other markets also. It has a lead to collapse, near collapse. Several large investment and commercial banks mortgage lenders, insurance companies. Why insurance companies? Insurance companies also, whatever the premiums they have collected, that is deposited in investments. They are invested in investments and savings, particularly hard-earned money of the people, savings, credit unions, that is banks, causing great recession. The financial crisis, like all crises, 2007 recession had led to warm conditions, particularly indicators revealed global imbalances. So that the global imbalances are also there. If on account of the financial crisis, if other sector, food or power or energy or other essential goods effect on there, the people will suffer. Not only people will suffer, across the globe will suffer because the trade, particularly the exports and imports problem will also arise. The economic state of US financial system, a global rating agency leading economic analyst did not pay attention to or believe in the immortality and the robustness of the United States. Once the good practices are followed, definitely everybody will appreciate, everybody will give the rating. If best practices are not followed and they are in confusion state of mind, how they will give the good rating to the country, whether it is a standard and approved or other rating agencies. Conclusion. Hence, the financial system is the backbone of the economy. 100%. Once the financial system collapse, the country will collapse. In the financial system is not monitored or controlled or regulated by the government properly. It not only affects the country, but also other countries also. This is due to interconnectivity of the countries through the globalization concept. Today, all countries are connectivity is there, like topologies are there, communication topologies in information technology, like bus topology or ring topology, different one, or mesh topology like that. Today, all countries are linked. If one problem arises when one node in a technology, the others will also stop. In the similar manner, on account of globalization, if one country is suffered, that too, that country is a small means no problem. Like Sri Lanka, if country is facing problem, there is no problem to other countries. But the developed countries or emerging countries or highly populated countries or if they are facing the problem, then the reflections will be there to the other countries also. So in my opinion, the root cause is subprime mortgage loans given to borrowers who are bad credit history and are more likely to default. Actually, this global financial crisis is originated from subprime lending crisis. That is subprime lending crisis. What is the meaning of that one? Loans given to borrower who are having bad credit history are more likely to default. The probability, because the credit worthiness is not up to the mark. The credit history is not up to the mark. If all banks are out of their total advances, 25% is given, whether banks will sustain? No. Once those who are invested in shares of the bank or the particularly mortgage-backed securities, then the investment will also fall down. Once investment fall down means the secondary market will also fall down. So the banking system, the secondary, particularly the securities market will also fall down. Once these two are fall down, economy will definitely lot of problems will arise. Hence, quality of credit or quality of lending or quality of investment is very important in the financial system of the country. Once this is missing, the country strength will a question mark. The strength of the question is the country is a question mark. This is in brief what I was to tell, and I thank you very much for giving an opportunity to discuss about the subject. And now, whatever the questions are there, I will address the questions. Thank you. Thank you very much.
Sir, we have received some questions in chat box. Please.
Tell me, madam.
Yes, sir. Sir, please check chat box.
Short box, madam. Madam, here on account of power cut, only one question is there. How much rendering based over the valuation unpredictable?
First question is, sir, does the C Institute conduct certificate course on public financial management system?
That your department has to tell, madam.
Okay, sir. Sir, second question is, what would be the impact on outsourced service from us?
Outsource?
What would be the impact on outsourced services from us?
That is also high risk. That is also high risk. Particularly in the banks are also, they are outsourcing the lending activity, like that of home loans. The outsourcing people, even low quality home loans also they are getting there, but the high risk is there. But if the bank is taking some measures to mitigate the risk, then that problem will not arise. Outsourcing is also dangerous, but checks and balances are very much required in outsourcing the business, particularly the home loan business or other business by the commercial bank. Next, madam.
Third question is, why banks, financial institutions lending for spending lavish luxury assets? Lending for spending is always dangerous to economy, result into more defaults, losses, delays, disturbance to financial system. Why Indian banks also following lending for spending, knowing better?
Madam, here, even though they know about the consequences of the crisis, the subprime lending crisis, still on account of the size of the balance sheet size they want to increase, or the market share in the country they want to increase. This way, some bad practices they are following, which is not a healthy signal to the banking system.
Next question is, how global financial crisis impact PFMS?
Global financial crisis in?
Impact PFMS.
Yes, madam. Once a public financial management system is, so the financial system of the public, particularly, suppose once the bank is collapsed, who are the sufferers? Who are the sufferers? The depositors. Depositors means the public only. Their hard-earned money they are depositing in the bank. Once the bank is collapsed, the public is suffered. The public financial amount, that is whatever the deposits and other things are there, that will also be damaged. Thereby, they will become virtually they will become the weak in the financial system. So it is interrelated. Once the crisis is there, public financial management system will suffer. Take for example, once the loans are turned into bad, I told earlier also, the banks are incurring losses. Once they are incurring losses, they are unable to pay the corporate tax. Once the corporate tax is not received by the government, how they will spend the public for welfare activities? Zero. Suppose if the banks are not doing any business, lending business, then the GST problem, the revenue problem of the government will arise. All these things are interconnected to the public financial management system.
Next question is, how much rationality in lending based on over valuations, unpredictable future performance projections instead of actual past performance?
How much rationality in a lending based on over valuations, unpredictable future performance projection instead of actual past performance? Actually, the future performance is also based on the past performance. Suppose the industry growth is 10% last year. Before is also last year 10 means next year also we will take 10%, not 20%. So whatever the past performance is the base for future performance. It doesn't mean so only we will take a rosy picture about the future. But whatever the past performance is there, all these things we will take into consideration. Then that is banks are taking into account. But sometimes one or two issues the problem may face. How financial sector globally invested without any risk assessment studies. Here, whenever we are investing in any company in India or other, we will see the financial statements, their annual reports, their ratings, the external ratings. So whenever we are investing globally also, we are taking all these things. But if at all the investor may not aware, then it may be a problem for them. But as a prudential the investor, whenever I am investing, I will take more precaution. Blindly, the investor will not invest his ordinary money in any other. Sir, yes, IT correct the unaccounted money saved in India from economic problems in 2008. What? Yes, IT, madam, IT.
Is it correct that unaccounted money
Is
saved
it
India from
correct
economic
that
problem in
unaccounted money saved India from economic problem in a unaccounted that it is very difficult because how much unaccounted money it is there, I don't know. That is also officially not declared. Did the global financial crisis did not alter all emerging economies in the world, or it did not affect only India? All economies. It affects all economies because that's why I told about the interconnectivity is there, particularly the trade, that investments, and all these things. It is not only for India, other countries also. Do you see that AAA mortgage-backed securities, high grade, coming to India with increasing credit being given in India? Sir, it depends upon the investor. It depends upon the investor. They have to take a call in this regard. Okay, madam. This is in brief about the today's discussion. Thank you very much for your patience listening from 11 to 1. I wish you all the best once again for the new financial year 24-25 to all the CA professionals. Thank you.
Thank you, sir, for delivering such an engaging and informative presentation. Your enthusiasm and in-depth knowledge of the subject were evident throughout the session. I learned a lot and truly enjoyed listening to your insights. Thank you so much, sir. Thank you, everyone, for participating in this webinar.
Okay, thank you, madam. I'm closing now. Okay, madam?
Okay, sir, let's end the webinar.
Thank you.
Thank you. Hanji, sir? Yes, sir.